business news, where news for business people.
Hello and welcome to Bloomberg Quint Live. Good morning. You're watching Daybreak. I'm Alex Matthew. First, let's look at the headlines. Donald Trump nominates Jerome Powell to take over from Janet Yellen as the next Fed chair. Powell says he's committed to financial stability. Asian markets open mixed as investors turn cautious before US jobs data. The dollar looks to end the week lower. The global metals rally helps Vedanta meet estimates in the second quarter. And Hindalco is also expected to post a good set of numbers when it comes out with its second quarter earnings today, but input costs could dent margins. Let's turn to the US markets now, and US markets eked out gains in the last half hour of trade. Bloomberg's Abigail Doolittle has all the key takeaways from that session.
Thursday's Wall Street session resulted in very small moves for the major averages. The Dow climbed by about 1/3%, in fact, putting in new record highs on those gains. The S&P 500, a fractional gain. The NASDAQ, a fractional loss. Now, two big pieces of news on the day. First, President Trump did nominate Jerome Powell for the head of the Fed. On this, we had safe haven bonds all day rallying just a bit. The second piece of big news, which actually came earlier in the session, was the Republican tax plan. Now, largely stocks shrugged that off, but certain sectors were hit by the tax plan, the Republican tax plan, including the home builders, down about 2.5%, the worst day of the year. And this as the tax plan is proposing for mortgage interest deductions to be capped at $500,000 versus $1 million. That's hitting the luxury home builders, Toll Brothers in particular, far more than the overall sector. Toll Brothers was down about 6%. Also hit by that tax plan, lithium-related companies plus Tesla. This on the possible withdrawal of the electric vehicle tax credit of $7,500. So pretty interesting implication there. On earnings, Facebook was down 2% on higher than expected 2018 expenses. Symantec, the internet security company, down 9%. Its worst day of the year on a cut forecast. Overall, the risk appetite on the day, with stocks trading somewhat mixed to flat and bonds rallying just a little bit. That risk appetite was essentially neutral in Thursday's Wall Street session. In New York, Abigail Doolittle, Bloomberg News.
Now, US President Donald Trump has nominated Jerome Powell as the new Fed chair. This marks a departure from other recent US presidents who all chose to reappoint the sitting Fed chair in their first term for the sake of continuity. While introducing his nominee, Trump said that he believes Powell will provide the leadership needed to take the US economy forward.
Today is another important milestone on the path to restoring economic opportunity for the American people. In just a short time, we have already made incredible strides. Unemployment is at its lowest level in more than 16 years. You know that very well. You know that very well, and you're happy about it. We've now had back-to-back quarters of 3% growth, a major accomplishment, and we're doing better and better every single week. But if we are to sustain all of this tremendous economic progress, our economy requires sound monetary policy and prudent oversight of our banking system. That is why we need strong, sound, and steady leadership at the United States Federal Reserve. I have nominated Jay to be our next federal chairman. And so important because he will provide exactly that type of leadership.
For his part, Jerome Powell said that the US economy had made substantial strides after the global crash of 2008. He said he intends to work towards improving the health of the economy even further. Here's a portion of his address at the White House ceremony.
While post-crisis improvements in regulation and supervision have helped to achieve these gains, I will continue to work with my colleagues to ensure that the Federal Reserve remains vigilant and prepared to respond to changes in markets and evolving risks. Finally, to echo the President's remarks, I've had the great privilege of serving under Chairman Bernanke and Chair Yellen, who guided the economy with insight and courage through difficult times while moving monetary policy toward greater transparency and predictability. Each of them embodies the highest ideals of public service, unquestioned integrity, and unflinching commitment to fulfilling our mandate. Inside the Federal Reserve, we understand that monetary policy decisions matter for American families and communities. I strongly share that sense of mission, and I'm committed to making decisions with objectivity, based on the best available evidence, in the long-standing tradition of monetary policy independence.
And here's what a couple of leading voices have to say about Powell's nomination.
His background is a terrific background. Again, a lot of government service in the Fed, service in the private sector. I think he's a very, very credible candidate. There were other credible candidates as well, but I am not one bit disappointed if it turns out to be Jay Powell.
He certainly hasn't had an experience during crisis. I mean, he's been there for the past 5 years. His experience is really in private equity as a salesperson rather than investing. I'm not sure what he knows about the inner workings of the financial system.
Bill Gross, they're unsure about the new Fed chair, rather the one who will become the new Fed chair. But let's look at the Asian markets. The Asian markets have opened mixed. All eyes would be on the US jobs data that comes out today. No initial cues from Japan. That market is closed today. But let's move on now. Bank of England has raised its interest rates. That was another key update from yesterday. For the first time in a decade, it has raised it to 0.05% from 0.25%. That was widely expected. But the commentary suggests that there is unlikely to be a series of quick rate hikes in the future. The central bank has suggested that the top speed at which the economy could sustainably grow without generating excessive inflationary pressures was 1.5%. But let's move to India now, and Darshan Mehta and Agam Vakil are here to set us up for the day's trade and all that's happened in the futures and options space. Darshan, first to you, what's on your list?
Lots of news, lots of earnings, and surprisingly, the SGX Nifty is also indicating a strong positive outlook. So, that's what we'll watch out for. So, the SGX Nifty actually has come off from the day's high, but nevertheless, above the 10,450 mark, the Nifty continues to be rather strong. So, SGX Nifty giving a positive outlook. Dr. Reddy's, surprisingly, the ADR ended up almost 5.5% higher. Yesterday, the entire pharma space in India was buzzing in trade. The other ADRs, HDFC Bank ended up almost 2%, and so did ICICI Bank, which ended up over 1%. So, traction from the ADRs is rather strong. Now, as far as crude is concerned, muted trade in early morning sessions for crude, but nevertheless, the Brent crude continues to trade above the $60 barrel mark, and WTI is nearing the $55 barrel per mark. So, no alarm bells as far as crude is concerned. As far as the commodity is concerned, the base metals ended weak on the LME, very, very flattish trade or slightly negative. Apart from tin, which was up in trade. COMEX copper opens with a positive bias in China currently. Apart from it, the other base metals that are coming out from China, positive cues coming from there. Steel is up almost 1.3%. The others trend to remain muted. As far as gold is concerned, for the third day in a row, you're seeing traction coming into the gold, into the yellow metal. So that is looking positive. As far as fund flows are concerned, for the second day in a row, FIs were net buyers to the tune of 1,000 crores, and DIs continue to sell. So the massive buy figure that we saw in October does not actually seem to be reflecting again here for DIs. They have been sellers in the cash market again. Now, as far as the entire trade setup is concerned, Nifty Pharma was up almost 3%, and this was led by DV's Lab, which was up almost 16%. The broader markets did manage to outperform the mid caps, small caps, the Nifty 50, all of them. Nifty mid cap 50 tended to do well, and the PSU banks was one of the worst performing stocks. No doubt, 2 days ago we had a big monster rally that came in the PSU banking space, but didn't work in trade yesterday. What contributed? ICICI, Sun Pharma, because of DV's was moving up. TCS. So the market was rather muted. So on both sides, you had ITC, SBI, and Tech Mahindra on the lower side. Tech Mahindra came out with numbers. But Agam, what's the FNOQ like?
Well, it was a flattish day of trade yesterday, considering the Nifty just moved down and shed around 16 points, but still holding on to 10,400. In terms of the futures, we're looking at about a 4.5% increase in open interest. When it comes to the Nifty Bank futures, if we can pull up the Bank Nifty futures, there you have further unwinding. This is the second consecutive day in which we are looking at unwinding of as much as 2.5% in the futures, while the index itself remains largely unchanged. But let's move on to the India Volatility Index. index, as you can see here, still holding on to the mark of 12, but it's coming down, it's on the decline. But when it comes to the put-call ratio, again, not much has changed there. Now standing at around 1.52 as against 1.5, so a little change as far as PCR goes. Moving in terms of change in open interest for options, as you can see here, we're looking at more writing in the 10,600 call and a lot more writing in the 10,200, 300 and 400 puts. So that's where you're looking at some amount of resistance building as far as your options go. But what are we keeping an eye on when it comes to stocks? Well, India Bull Realty back into the ban. And of course, in terms of some other counters, we're watching out for Hexaware. Very good set of earnings coming in for Hexaware, on the back of which a lot of longs are building up. And on the other hand, weakness seeps in Canara Bank. So while the stock has declined by as much as 2.5%, we're looking at fresh shots building with the open interest increasing by nearly 15%. Again, Alex, it'll be an earnings day full of earnings, and a lot of these stocks will move on the back of those.
But Agam, thank God it's Friday, right?
All right, yes.
No, but I'm also talking about your show and the show
Absolutely,
that you do later this evening.
I do. Yes,
who are you going to be speaking to?
We're going to be speaking to Vikas Khemani today.
Absolutely. So you guys stay tuned for that. That will take place later this evening. Agam will be back with that very interesting conversation. But let's take a check on the rupee and the bond market now. Saloni Dhanuka joins us. Saloni, what do you have for us?
So, well, Alex, the Indian rupee, despite a firm start yesterday, it ended steady at 64.61 levels against the US dollar. Now, the home currency did touch an intraday high of 64.48 levels. Its highest level since a month, largely supported by abundant inflows into the local equities. Now, in the currency forward market, premium for dollar fell sharply by 6 paise to 279 paise due to selling pressure from exporters. Now, it is a premium paid by importers to hedge their payment overseas, while it is something which is received by exporters against their realizations. On the global front, Bank of England raised rates for the first time in over a decade, but signaled only a gradual easing in the future. Now, this dovish hike sent the pound 1.5% lower to 1.3043 levels against the US dollar. Now, elsewhere, the dollar index is now trading in the green at 94.70 levels after President Trump announced two big events yesterday, that is US tax reform measures along with nomination of Powell as the new Fed chair. Now, which was again in line with market expectations. Talking about dollar rupee back home, it is trading at 64.51 levels against the US dollar in the non-deliverable forward market, which indicates a stronger opening for Indian rupee in today's trade. Speaking about the bond market, the 10-year benchmark yield ended 3 basis points lower at 6.86%. And lastly, global funds increased their rupee debt holdings for the 8th consecutive session yesterday. They infused close to 67 crore rupees according to NSDL data, Alex.
Thanks for that, Saloni. Let's shift focus to the commodity space now, and Jayesh Khilani has all the updates there. Jayesh, what's on your list today?
Morning, Alex. So let me start off with gold prices, which have seen an uptick for 3 consecutive sessions. Spot gold, last time I checked, was trading near the 1275 mark. And, this is on the back of US President announcing that the next Fed chairman would be, Jerome Powell. And on account of that, the dollar did actually slip and, drop to about 94.60 odd levels. And that's why we're seeing some bit of uptick come in for gold prices. Moving on to the base metal space, we have seen some bit of pause come about for the rally that we have seen in 2017. So yesterday, most of the base metals declined on the LME. However, it's important to note that most of these base metals have had a 20% plus rally in 2017. And moving on to oil prices, we are seeing some bit of green come about over there as well. WTI trading below the 55 mark and Brent trading just below the 61 mark. BNP Paribas has come out with a note in which they have upgraded their 4th quarter target. However, the key takeaway for me over there was that they are saying one should remain cautious going into 2018.
Thanks for that, Jayesh. Now, let's turn to earnings. Vedanta's September quarter earnings were largely in line with analyst estimates. Nikki Manchandani is here with all the key takeaways. Nikki, over to you.
Hi, Alex. Rightly put, their earnings were in line with estimates. There were no major disappointments. Yes, there were some cost pressures, but those were pretty much on expected lines. We did see some higher commodity as well as prices and a low base of Hindustan zinc volumes, which primarily drove the EBITDA growth. But then higher cost of the higher input cost for its aluminium business, which was pretty much on expected lines, weighed on the margins of the company, which to an extent contracted. Now, coal shortage, along with your partial shutdown at the captive power plants and carbon cost, weighed on the aluminium business. Also, the company, the management on its con call said that it expects the cost pressures on the aluminium business to remain elevated in Q3 also, for that matter. It does expect, for that matter, it also reduced the guidance for aluminium production from 1.5 to 1.6 MT to around 1.3, 1.4 for the complete financial year. It said that it expects the cost pressures to ease going forward in the Q4, led by a seasonally high coal production by Coal India. And it said that the potential restart at the partial Jharsuguda smelter plant, which also led to some volume issues, is expected to come to the rescue for a better Q4 show for the company.
Thanks for that, Nikki. Now, Power Grid reported better than expected September quarter. Jayesh is back with the fine print of those results. Jayesh, the revenues were slightly below expectations, though.
Yes, Alex. Overall, largely in line, just slightly, better than expected on the operational front. So the revenue grew as much as 16%. We were anticipating a 18% growth. Net profit was up 14.36%. Our number was very close to that as well. Operationally, some bit of positive coming in. EBITDA was up 15.5% at 6,475 crores, and the margins were very nice. We got 89.3 as compared to 89.6. That was better than what we were expecting. As far as segmental performance was concerned, some bit of disappointment coming in for the consultancy space. Transmission revenue, however, grew 16%, and consultancy revenue was down nearly 25%. The positive surprise over there came in from the telecom segment, which saw a revenue growth of about 21%. As far as operational profit of all these segments was concerned, transmission saw a growth of about 15.2%. Consultancy, once again, the disappointment coming in over there, that was down nearly 36%. And telecom, a positive surprise, 45% at 99 crores. So overall, largely in line, just a slightly better number on the operational front.
Thanks for that, Jayesh. Now, higher metal prices might aid Hindalco's top line in the second quarter, but input costs are expected to weigh on margins. Nikki is back to tell you what to look for. Nikki?
A good set of numbers coming in from Novelis. So we expect the Hindalco stock to open relatively higher because Novelis margins have come at a 5-year high. And with that, the EBITDA guidance has also been increased for the year by as much as $50 million or 5% for that matter. It says, just like the trend has been playing out in the entire non-ferrous space or the aluminium space, that you'd say there are cost pressures coming in which are offsetting the LME prices. That's a trend that we've also seen in ferrous as well as non-ferrous space by now. So Novelis is no exception there. But then the good part here is that the margins are at 5-year high and the guidance has been revised, which will have some positive effect on Hindalco for that matter.
Thanks for that, Nikki. Now, the pace at which startups have started cropping up has slowed down in India. The latest data released by industry body NASSCOM shows that there has been a 29% drop in the new ventures being set up in the startup space. A major reason for that is the drop in angel funding, according to NASSCOM President R. Chandrasekaran, who was speaking to Nishant Sharma. He says that one of the big reasons for the drop are the hurdles faced by these investors. Listen in.
The persisting issue of the angel tax, so-called angel tax, which actually taxes angel investment even before they have made any profit and at the point of investment, in effect. This, I think, is a big dampener. And also, curiously enough, distorts the playing field between a domestic investor and a foreign investor.
Right.
So imagine that a foreign investor does not face this tax, whereas a domestic investor faces it. We do need to focus as a country on the ease of starting a business. Today, worldwide, countries are ensuring that a business can start in 24 hours or less.
Right.
And many of them are not only enabling instant registration and instant start, but also remotely.
Right.
So you can actually start a business in those countries sitting here in India faster than you can in India. So the third issue is about the way that many of the regulations and regulatory provisions apply, where companies that are based out of India face certain constraints, which they would not have faced had they been a company operating from overseas. In terms of the market in India, again, there are certain constraints which apply if you are a domestic operator. But if you are a foreign company, then those constraints don't operate.
Now, what are the stocks that you have to watch out for today? Shraddha Babla has a list and she's going to tell you just now. Shraddha, what are the stocks that you have for us?
Well, to start off with, you have Unichem Laboratory and Torrent Pharma, which will be in focus on the back of a Times of India report which says that Torrent Pharma is looking to buy Unichem's domestic operations for as much as 3,500 crores, and that values Unichem's business, Unichem, at about 4 times FY17 revenues. Formal announcement of the deal could be expected today, given that both the companies reported their earnings. That's what the TOI report says. Moving on, after a failed attempt to merge with HDFC Life, you now have Max Life Insurance Company, which has entered into formal negotiations with Lakshmi Vilas Bank. Now, this is an ET report, and they say that Max Life could want to increase its stake from the current 4.39% to about 10% to become the single largest shareholder in the lender. So keep an eye out for those names as well. You have the smaller chemicals company SRF, which has signed a definitive agreement to acquire HFC 125 assets from Mexichem UK Limited. Now, HFC 125 is a hydrofluorocarbon refrigerant which is used in the air conditioning industry, and this deal is for about $10 million. That's about 65 crores. Bharat Forgings and RK Forgings are going to be two stocks which will be in focus as well on the back of North America Class 8 truck sales numbers that came out for the month of October. Now, they have grown 62% on a sequential basis and 161% on a year-on-year basis. So big moves expected there as well. VST Tillers, which has said that their overall tractor sales for the month of October came in about 14.4% higher at 2,577 units. And you also have Rakesh Jhunjhunwala's Rare Enterprises, which sold 12.5 lakh shares of Delta Corp on 31st October and 1st November in the open market. So you could see some reaction on Delta Corp as well.
Right. We'll leave it at that. Let's go straight across to Somit Sarkar, who has all the big brokerage calls of the day. Somit.
So on the brokerages, first we have a Credit Suisse on PNB Housing Finance. Now they have initiated coverage with an outperform rating and a target price of 1,780, which suggests a potential upside of 24%. Now PNB Housing Finance is one of the fastest growing NBFC in India, and they should be able to sustain this growth via geographical expansion and unique hub and spoke model. Now, as the company is gaining scale, you can expect benefits of operating leverage to kick in, which should accelerate the return on equity to 18% by financial year 2020. Now, Credit Suisse is expecting the company's loan growth, revenue and net profit to grow at a compounded annual growth rate of 40%, 50% and 51% over FY17 to FY20. Second, we have is Credit Suisse on L&T Finance holding. Now, they have initiated coverage with a neutral rating and a target price of 210, which suggests a potential upside of just 6%. Now, the new management is identifying new focus area and trimming the defocused business. But however, the loan book of the company remains remains corporate heavy, which is unlikely to change because the new focus is on select infra, builder loans and smaller scale identified retail segments. Now, Credit Suisse is also expecting the low credit cost to remain high for the company, and L&T Finance is currently trading at multiples of retail private lenders, and so you can expect a negligible upside from the current levels. Further, going forward, higher than expected loan loss, slower growth in retail could be the negative for the stock, while stronger than expected loan growth and lower credit cost could be the positives for the company.
Right. Thanks, Somit, for that. Now, cyber and social media attacks, data breaches, identity thefts, extortion and bullying are becoming bigger problems by the day. But to counter the risk of this happening to you, you now have insurance that can provide cover. Ridhima Saxena filed this report on how it will work.
Well, if you're 18, you can insure yourself with the Bajaj Allianz General Insurance Company. This is the first such cyber liability cover for individuals and becomes extremely relevant for a country like India, which is the top market for social media apps like WhatsApp and Facebook. Through this insurance policy, all your legal expenses, defamation losses and data restoration costs will be covered. In fact, in a press statement released by the company earlier, it said that it will also cover your transportation for court summons, your counseling services, as well as the extortion losses. While the company is yet to announce the policy details, it said that it is putting together a special team of IT and forensic experts to backtrack the data. One of the insurance experts who we spoke to, Ashwin Parekh, said that this will become extremely important for the company to avoid incurring losses, as it is very difficult to ascertain the losses due to cyberbullying or stalking. In fact, he also said that this may get equated to motor third-party insurance policies, which in India have traditionally been long drawn because of pending litigation and have a habit of piling up.
Well, the Delhi bench of the NCLT has admitted an insolvency plea filed against Applied Electromagnetic Private Limited. A bit of a mouthful, that company, but what's new with that? This time, it's an employee filing an insolvency petition and not the lenders. So why was the petition filed and what did the court say? Shivani Saxena has the full story.
Delhi bench of the NCLT admitted yet another insolvency petition, this time against Applied Electromagnetic Private Limited for its failure to pay its employees' dues on time. Employee Nitin Gupta had contended that the delays led to an accumulated unpaid salary of approximately 46 lakhs. The company contested these claims, saying that they are barred by limitation, to which the tribunal held that a portion of these claims arose between 2015 and 2017 and are clearly not time barred. The company also argued that the petition be dismissed since the employee had already approached a labour law authority in relation to these claims and is now forum shopping. NCLT rejected these arguments and interestingly held that no law prohibits an employee from initiating insolvency proceedings even if it had complained before a labour law department. It held that once a company has defaulted on its payment of an employer's due and the default amount is over 1 lakh rupees, the employee is then qualified to file an application under the code. Since the insolvency application has been admitted, this entails that the control of the company move from the hands of the director to a resolution professional and a formation of a committee of creditors and the whole rigmarole.
Right, so there's a lot to talk about over the course of the day, and you'll find all the live market action on Bloomberg Quint, this Bloomberg Quint Live. There are also a few stories on the website bloombergquint.com that you should consider reading. Here are a couple of them. First up, Mahindra CIE is looking to equip itself to supply parts for electric vehicles when the trend catches on in India. The company is looking at acquisitions largely in the aluminium space. That's according to Chairman Hemant Luthra, and he said that in an interview with Bloomberg Quint. Now, moving on, India fell 21 places in the World Economic Forum's Global Gender Gap Index due to less participation of women in the economy and low wages. India's ranking is lower than that of neighbors China and Bangladesh. The ranking is also 10 notches lower than 2006 when the index first came into effect. Bangladesh is ranked 47th, while China is ranked 100th. Well, with that, it's a wrap on this edition of Daybreak. All you need to know is up next. This is Bloomberg Quint. Thanks for watching.